What is up, guys? It is your boy, No Risk, No Premium, back with another episode of the Sunday Sermon. Good morning and happy Sunday, everybody. Hope you had an amazing Sunday. Hope you had an amazing weekend as well. And now it's time to obviously utilize Sundays to get yourself right for the week. Right? That's why we do these calls. So, let's just dive right on into it. Okay, what's going on this week? Well, from economic data standpoint, it's a ton. Um, you can see the manufacturing PMI, this Case-Shiller Price Index, Consumer Confidence Index, new home sales. You got jobless claims. You have the real gross domestic product. Okay. And then Friday you got core PC. So every single day you got something coming out that the market will definitely need to digest or react to. Majority of these, the majority of these economic data prints come out, you see 8:30 a.m. Eastern typically. Some of them are 10 a.m. or 9 a.m., right? 9:45. So you could see, look, there are some that come out like the Consumer Confidence Index, right? And then the the University of Michigan 5-year inflation. Those are tricky ones. You obviously need to know that since the market's open and those data points drop, you're in a position you know that there can be a overreaction or just a rapid move. Okay, so something to just take into note. Typically all these huge prints like CPI, CPE, all those they typically come out before market open. So there's usually a directional move that happens then. But just something to make noteworthy of. Just don't want you to get caught off sides this week is all. For the Fed, nobody is on this week. It seems like, right? So thank God. No one's on this week, so we just have a ton of economic data, and then we have the goddamn heavyweight fucking division of earnings this week. I mean, Apple, Amazon, Microsoft, Meta, Alphabet, which is Google, UPS, Coca-Cola, GM. Just this top line right here is insane. Obviously, there are others, but since the majority of us trade SPY and SPX, we'll want to obviously follow and track the stocks that make up the highest percentage weights of the S&P 500. Or if you trade in the Qs, Apple and Microsoft are obviously the two most weighted. Okay. But Amazon, Google, and Meta all have higher, like our higher weights for the sector or for that ETF as well. Okay. So, with that being said, to me, it doesn't really matter what the earnings come out at. I don't really care. I just care about how is the market reacting. Okay. Now I can tell you this: we had last week, right? We had Netflix and we had Tesla last week. And the market failed to make new lows on, I mean, however you wanted to digest them, or Snapchat to earnings misses, no guidance, whatever. Um, didn't make a new low. We ended up rebounding on Friday. Now, Friday was the OPEX day. So let's hit the charts now. All right, Friday was the OPEX day. So you could see here, right? Two or a very nice big green candle. Okay. Very nice big green candle, a double outside bar on SPY. Interesting. Okay, double outside bar. Okay, so you can see this whole candle has a lower low and a higher high, and same with this candle to the upside. So the directional move now, to me, just looking at the chart, looks like, hey, it looks like we could try to take a shot here at this 378 level. Okay, this 378 level. But there's one thing I do want to note, right? Just look. Okay, we traded in this range pretty much for, I mean, what? This is 9:23 or 10:23 today. We're in a month where a couple times we had a breakup over, right? But then a basically a failed breakout and then back into this range. And some would call this the balance area. Whatever. It's a range. This is just definitely a range right here, right? Anytime you got the 357, we bounce right back on up, right? So now, right, and then we had a failed breakdown here, 347, bounce back up. He'll peak our head above, on Tuesday last week, only to fall back into this range. However, now we have another candle close here. Okay, remember we mentioned it last week. I think we imagined, we saw a little, left shoulder, head, right shoulder possibly forming here. To me, this also looks like a possible stage one. Okay. If you know the 4 stages of stock, stage 1 is accumulation. Okay. It's basically building a base, accumulating here. Okay. We have the 5 MA has officially crossed the 20 MA. The green or blue dotted 369.23 now, okay, is crossed over the 366, the green moving average, or green, the 20-day moving average. Okay, just go back. Let's see when the last time that happened. Okay. See, the last time that happened was here. Okay. You see, we had the true cross, okay, here. And what do we do? The market had a bear market rally up to 431 last time, right? So now, does this area, just look at this area. Does this look pretty? I mean, this looks pretty identical to the area we're in right now, right? I mean, look at that. Take a look at the left and now look at the right. Lots of choppy range trading, right? Failed breakouts, failed breakdowns. Okay. And when we were in this range, everybody was screaming for new lows every time we got back down. But 370, by golly, hung on. Okay. 370 was super strong here. Okay. But we couldn't get over 390 here, right? But we finally broke out when we had that crossover. Okay. You could also argue it was the 9 or the 9 EMA, so yellow, solid yellow, crossing over the 20 MA. Okay. There's a lot of crosses could be happening here, right? And then we have the 20, we had the 821 EMA crossover here as well, right? 821 is the yellow and the red. Okay. That also ignited. So it's a lot of this same, very similar price action is happening here right now, right? You got the 8 EMA 367.72. It's crossed the 20 MA. It's crossed over. Well, it was trading above the 5. The 5 and the 8 EMA, they follow each other pretty closely, as you can see here, right? But now, do we get this 821 EMA crossover here now? This is 370. The 21 EMA, 8 EMA 367.72. Okay. So what am I looking for this week? Well, this week, obviously, it's going to be volatile. Okay. The VIX is still above 30. We have a ton of earnings this week. Huge heavyweight hitters that move the market. These things move the market. Expect possible gap ups and gap downs on any misses or beats or whatever, just the reaction. Okay. So I would fully anticipate the first trade I would be looking for. Okay. Depending where we open. If we gap up, I'm looking to probably take a stab short here, 378. Okay, 378 happens to be where the super trend is here as well. This solid, thick red line. Okay, 377.34, and we have right here there's huge demand or huge supply here. This 378 area. Okay, as you can see, anytime we got up there, we failed it. Okay, that's the first level I'd want to definitely take a short at. Now, from getting long standpoint, okay, if we, depending where we open, if we hold 370 to 372 tomorrow on any dip, I would probably be a buyer. Okay, I will probably be a buyer down there. Call side, for sure. Okay, so this is my plan for this week. As long as bulls want no lower, they want no lower than the 20 MA, 366 really. Okay, if we get back under 366, this could be a failed breakout attempt of this range. Okay, so as long as 366 holds, okay, you'll definitely, I mean, bulls are technically can't still make the bounce up. That's what it did last week, right? It held that 366. Okay, for the most part. And then we went higher. Okay. So, but as far as tomorrow is my concern for tomorrow, depending where we open, I'm assuming a flat open is very possible. I think we could get a dip down to 372 or 370. Okay. And if we hold those levels, I'll definitely want to take a stab long there. Okay. And then other than that, I'd want to short 377, 378. Okay. On the initial rejection from there. Okay. Now, if you do get long here, okay, at this 370, I thought this is important because we're still in this range, right? We're still in this range. So when you're trading in a range, you buy the bottom or you buy calls at support, right? And then you sell into strength and you sell at resistance. So do you think it'd be smart to sell 375, right? Pretty much this day's high, last week's high. Okay. And maybe leave runners to 378 And then if you get to 378, you want to be out the majority of your position. I'd say at least 90% of your position you would want to be out of there. Okay. Because look, we could break out and run. Okay. But when was the last time we broke out and ran? Right? It doesn't happen often. The market either trends or it consolidates. It trends, meaning it trades sideways or it's in a range or it's consolidating, right? For a longer amount or a larger percentage of the time, it is consolidating. Okay, it is consolidating. I think I said that wrong. Sorry. The market either trends or it consolidates. Okay. Majority is say 3/4 the time, sorry, 75% of the time. It is consolidating, it is ranging, it is strappy trading. Those trend days, those breakout, those continuation days are very less, say about 25% of the time we actually break out and have continuation through a range. So if you're going to long 370, 370, 372 because it holds tomorrow, then you'll want to make sure you're getting out and selling into strength. So sell 375, sell 378. Okay. And maybe you leave a couple runners, 90% of your or 10% of your position that are runners, right? That you can, because look, if we do get through 378, it's almost, I'm pretty sure we're going to go right here to about 380, 382. And then I'm looking at this 387. It's a 50 MA on the daily here. 50 MA on the daily. I would look to get there as well. Okay. But initially, I would definitely want to take a stab short 378. Okay, now I'm not saying that we fall back down to the depths of hell from there, but that's a trade. Okay, and we could come down, we could open up, run up, hit our head 378 tomorrow, and then drop back down to 375 or 372. But as long as that holds, then we're still I'm looking upward towards these upside targets. Okay, so important upside targets for sure. 50 MA on the daily, purple dotted. See that? Now look at this weekly chart. Interesting stuff on this weekly chart. Look what we got up here. 20 MA on the weekly. 20 MA on the weekly. 389. So we've got the 50 MA on the daily is 387 and 20 MA is 389. 2 points off from each other. Okay. And if you always look, you guys, the MAs are not, they're not definite. They're not the end all be all, it is, you use them as a roadmap and you can use them kind of as magnets. Okay, if you just look historically, anytime you get away from the MAs, right? So look at follow this green dotted line here. We break above it, we come back and touch it. Okay, we break above it, we come back and touch it. We break below it, we come back and touch it. Break below it, come back and touch it. Okay, so we've been broken down below for quite some time now on the majority of the higher time frames. Do you not think it's time for us to maybe come back up and just kiss this 389 level? Maybe. And that's depending where it opens next week. Expect them to be a tad bit lower when the price updates. Okay. But other than that, that's for this coming week. That would be my ultimate price target. Would be about I'd call it 389, 390. Okay, because there is definitely even more. There is more resistance up there as well. Okay, you can see 390 was major supply here now, and then major demand here. Okay, then it has a support resistance flip, and this actually flipped into supply, and we failed that level, and that's when we fell to the depths of hell. It's from the 390. So maybe do we back test that breakdown level? Very possible. Very possible. Have the 100 MA on top. This brown dotted line is the 100 MA. Not a fan favorite by most, but I like to put on the chart just so I can see where it's at. Okay. 390 though. So that's why my price target for this week is definitely 390. Okay. Now, what happens if we break down below 364? Okay. We almost definitely go and test 360, 357. A 357 breakdown is there's going to be people probably calling their financial advisor and asking them to liquidate. I think we definitely see new lows on a 357 break. Okay, so the downside levels would be super simple, right? Underneath 364, 360, 357, 348. Okay, 348. Underneath 348, 342, 339. All right. Other than that, guys, that's it. Super simple and short one today. Hope you all had a great weekend. Or just remember this. Huge names reporting this week. Okay. That definitely moved the markets. So I do think that all of this basing is going to end probably this week. And I think we either get a break up or a breakdown. The chart is telling me we're going to go higher before we go lower. Okay. So in that, guys, hey, get your levels right. Okay. Wake up early and don't do anything fucking stupid. I'll see you bright and early in the pre-market. Peace.